Hello traders and welcome to another video review. Today is Tuesday, the 8th of June 2021. Let's take a look at the Forex calendar. None of the key data had been released overnight, but we got some important data from Japan. Average cash earnings, gross domestic product, GDP deflator, bank lending and current account. All of this data had been released deep overnight. And the key data, like gross domestic product, were better than expected, minus 1% versus minus 1.3%, which means that gross domestic product is slowly increasing in Japan. During the London session, we have industrial production and ZEW economic sentiment, current situation and survey data from Germany, scheduled for release at 10 o'clock. We have ZEW survey, economic sentiment, GDP and employment change data from the Eurozone, scheduled for release at 10 o'clock as well. And that was the apparently they were the most important data for the London session. During the New York session, we have some data from Canada, trade balance, scheduled for release 1:30, and trade balance from the US, scheduled for release at 1:30 as well. Then we got some speeches from Andy Haldane at 2 o'clock, and at the end of the day, job openings data from 3 o'clock. So not many of the important data here, but we'll definitely take a look at the euro today due to the ZEW economic sentiment data, and of course we'll take a look at the Japanese yen. So let's take a look at the Japanese yen first. We got the US dollar to the Japanese yen chart here, and what do we have on the chart? The first thing is bearish engulfing. As you can see here, around 110.21, the local high was made slightly above 110.33. Nevertheless, this is clear bearish engulfing pattern at the end of this overlapping move up. This is clearly corrective wave in nature. It might be ABCX, ABC, so that would be something like a complex corrective structure. Bearish engulfing, we are going down towards 109.37. As you can see, yesterday this level had been violated. The low is 109.20, and today we have a bounce from very interesting place, because this is the lower channel boundary here, this gray line, and short-term trend line support. So if we break below this level, if we break below yesterday's low, apparently 109.20 pips, then the road towards 108.58, then 41 is open, and we should see a decrease in momentum. I mean, right now the momentum had bounced from the level of 50 points, so this is the neutral level. But if we break down, the decrease in momentum will get in any further towards 40 points, and this is negative territory. This is the territory where the bears are in control of the market. The key technical resistance, market with the blue arrow, 111.71, had never been touched yet. So that's the US dollar to Japanese yen. Let's take a look at the euro to the Japanese yen, because we got data both from Eurozone and Japan. So what is going on here? Trading inside of this channel, right? So we are trading up, not a problem here. We just broke back below 133.13. So that recent level here will be now, there you go, 134.9 pips is now the high for all of this up wave. And as you can see here, we got some sort of the kind of a consolidation here, then we have a down candle, then we have a shooting star, doji, plenty of the candles that are telling us something is going on here, and we of course have decline. I'm not quite sure if this decline towards 133.13 is more than 1%, but let's just check if this is any bigger decline than usual. We have exactly 0.89%, so that's not that big. So we need to decline towards at least, yes, at least the technical support at 132.34. That will be like a bigger decline. That would definitely change the outlook for the US, for the euro to the Japanese yen. So we are waiting for the bigger decline. We are waiting for 132.34. As you can see, this is the confirmation. We have a pullback in RSI towards 56 points and a decline towards 50 points, which is here, would definitely mean that we are testing the key technical support in the short term, 132.34. So please keep an eye on the euro to the Japanese yen. Because we got the Canadian data, let's take a look at the US dollar to the Canadian dollar. There isn't much going on here. There isn't much going on here because any bounce up is being blocked by bears, and bounce back up capped by bears. And that's the same scenario the market is playing under 2,143 pips. So this is of course still a kind of a rising momentum on the RSI, but this rising momentum doesn't actually is not being shown on this chart. So I think that the bears are still under the control of the market. They're capping all of this attempts to bounce from the bulls. 2061 is definitely out of the question. Now the key technical support is 1.20, which almost had been hit here during this recent this kind of a pin bar, kind of a let's say hangman, but I will stay with the pin bar. So during this pin bar down move, and there is one more of course level, the last hope, 1.1917. Okay, let's say like this. Right now the key technical resistance 1.2244 had not been hit in any time, so that's basically something is going on here. But I wouldn't be surprised if there is another spike lower, because there's definitely some sort of the bearish attack on the US dollar to the Canadian dollar, as you can see. Let's just take a look at the crude oil. What is crude oil doing? And as you can see, we have hit the target. We have hit 70.10, no, 69.99. So there's 11 pips shy move up on this recent breakout to the upside. Just as expected, 17.10, 17.11 was the key technical target. We got some sort of the let's say like a pin bar candle here, but not that big upper and upper shadow and lower shadow. But definitely we can say that the market came back into the channel, and right now we are going to test 67.97. So the first initial reaction to this level 70 or 70.10 is basically bearish, so we have a pullback. Now the question is whether this pullback will get below 67.97 or 67.06, because this is the key technical support level. Right now the trend is still up. We are close to the level of the 70, which is of course the the overbought market conditions level, but we can still travel higher. But first we need to break above 70.11. level. So the question is whether this market will do something like that, go back to this trend line, test it, and then go higher. So I think that might be a possible scenario, or maybe even here and then go higher, no problem. But that's the possible scenario for the crude oil. The overall uptrend, as you can see from the perspective, is still intact. We are still going up and up and up. So this is not some sort of the market reversal pattern on anything like this. We are still going higher and higher on the crude oil as well. So that's everything for me for today. Thank you very much for watching, and I hope I see you guys tomorrow. Take care and bye bye.